This is pretty easy. Adjust the forecasted cash balance. Cash is your plug on the balance sheet. You want your balance sheet to balance. Once you do everything else, you figure out or estimate what it's going to be. The difference is going to go to cash. And this is a real number. And it indicates to you how much cash the company is going to have. And if it deviates a lot from the historical norm, that means that there may be a problem. So what we would do is we look at cash as a percentage of sales to get a sense of where cash should be. And that would be like a normal level of cash. And if you're way above it or way below it, then that may indicate that there's a problem. And or something is going on. There's something that you're not accounting for. And it's very possible that the previous year's cash was a little abnormal too. So in which case, whatever you're basing your information on is based on something which is weird and abnormal. So you need to go and look at that too. So if your cash balance is higher than normal, it may indicate that the company is just generating a lot of cash and it's good news. It might, what the company would do in reality is they would have excess liquidity, and maybe they're going to invest it in marketable securities. They're going to pay down debt, repurchase stock, maybe pay more dividends, do a combination of these things. It's very possible that they're going to have a lot of cash. And if they are going to have a lot of cash, then that would be something that you would consider to be good news. On the other hand, if cash balance is lower than normal, that may indicate the company is not generating enough cash, and you may also see a loss on the income statement. Well, then you would expect if there's a loss on the income statement, and let's say there's a reduction in sales, then the cash balance is going to go down. In which case, you need to figure out, well, what is the company going to do? Is the company going to borrow more money? Is it going to sell stock? Is it going to sell some marketable securities? Somehow the company is going to need to get its cash balance back up again. So when you see this cash plug higher or lower than normal, then you need to think about what the company would do. And again, having a good understanding of the company and the company's history is going to help you through a question like this.